Welcome to today's BGL monthly webinar for November 2023. My name is Jeevan Toki and I'm Head of Product. Okay, today as always, the session will be recorded and it will be available on BGL's YouTube channel. All attendees will also receive an emailed link to the recorded session. So if they need to share it with their colleagues or if you do miss any parts of it, you'll be able to rewatch that. Questions, we always love questions. So any questions you do have, please enter them into the Q&A panel. Okay, today as always, I'll be going through the BGL update in the first section there, covering the new features in our last update. I'm joined by CEO and founder of Smart SMSF, Aaron Dunn. So Aaron, welcome.
Thanks, Jeevan. G'day, how are you?
Very good, how are you doing?
Not too bad. It's I think most of my travels are finished now, which is great, but there's no shortage of content, obviously, at the moment with the government sort of full steam ahead in Parliament. So, yeah, just kind of touch on a couple of things a little bit later that we've seen following on from our Div 296 discussion last month.
Fantastic. And as always, Aaron and I will be happy to take any questions that you do send through at the end of today's session. Okay, so let's jump into the BGL update first. So our last update we released there on the 9th of November towards the start of the month. And our next update's actually coming out this Thursday. I'll touch on a couple of features being released in that towards the end of the presentation. So first one is our new security screen. So obviously we released this in the previous update, but we've done some enhancements around that. So let's jump into Simple Fund 360 and have a look at what's actually changed. So with the new security screen, you can see we've maintained both the old and the new screen for the time being. Early in the new year, we will start turning off or hiding the old screen. So please start using the new screen and getting used to that. It obviously has all the actual, hopefully, same attributes. There were some issues in the first release, which we've now corrected, and some performance issues we have corrected there too. So as you can see there on screen, so I've got here for this sample portfolio, you do have the ability, first of all, to search across any exchange, which is a good thing. In the previous screen, you had to actually select the exchange first, then select the actual product that you'd like to search for. So that's one thing that's an improvement that's been done there. For anyone who hasn't seen this before, you do have the ability now to enter, I suppose, add custom prices in a lot simpler fashion. You do have the ability, as you can see on the left-hand side, it will by default for the particular fund or portfolio display just those assets which hold a balance at that particular date. And you can change that based on the actual financial year. And you can also trigger this particular icon here to view all holdings for the particular fund, regardless of whether they're still on hand or not. So I'll keep this to just the ones but they're on hand. The key things of what we've done there is actually in our last update, so just triggering through, is where you, so one thing I'll point out for those who hadn't seen this before as well, is you do now have the ability to enter in a custom asset allocation. So that was something where it was only maintained there by the system or default allocation, so you can now override that. Going back here to the security prices, a couple of things there. So now when entering the custom price that you do have, so I'll just enter in $100 you do have the ability, so normally by default, whatever price you enter in, custom price you enter in there is actually applied for all funds or all entities across your particular firm. You now have that where there's circumstances that you'd like just that price to be applied there to that particular fund. You do have the ability to tick that particular option. And what it'll do then, it'll go through and I'll just enter in. It will automatically apply just for that particular fund. So this might be a case of especially things such as managed funds, where particular funds might be receive a wholesale price compared to other funds, or you may have particular or custom prices that you'd like to apply to one fund versus another, maybe based on what the actual statement has, for example. So you do have the ability now to trigger that. As part of that, what we also have done is under badges is obviously edited the the revaluation order there. So you do have the ability, you will see custom fund there. By default, it will appear on top. You do have the ability to customize the order there for revaluations. Going back to the security list there. Also just a reminder there, for audit purposes, we have added that unit prices report. So that's obviously available there directly from the report screen as well. And a lot of feedback from auditors is they're loving this new report. And as you can see there on screen, it will actually provide a list of, for the particular financial year, what's the date of the last price being used, what's the source of it, was it a system-based price, was it manually entered, etc., and what the actual last price is, and obviously who the last person to update that is. So you can see some relevant information displayed in that particular report. Okay, so next one there feature we added is an integration there with Crypto Tax Calculator. So I'm not going to demonstrate this particular one, but Crypto Tax Calculator, as the name suggests, is an Australian-based crypto tax platform. So they connect to various brokers, DeFi platforms, exchanges, and obviously the cryptocurrency space. Track the particular portfolio, calculate obviously the tax position for the particular portfolio, and obviously the key piece for us is you do have the ability to export that information out and import it directly into either Simple Fund 360 or Simple Invest 360. So the one key thing to point out is if you are looking to utilize this for your clients, is you must be on either the investor plan or the trader plan there. And if you'd like any information about the actual Crypto Tax Calculator platform itself, feel free to contact them directly, because they're obviously the experts. Is not an actual platform of BGLs, but obviously that integration will speed up. And now that the cryptocurrency market is recovering, we're bound to see, obviously, I guess in the next financial year, the trading to SMSF's return. Next screen we've added there is the cash flow report. So going back one. So this new screen here is the ability, obviously, there to display the cash flow for the particular fund, trust, or company. Oops, I've got the wrong slide there. Particular slide, and you've got the ability, obviously, to look at what's actually occurred for the particular financial year, generate that as a report, or customize that. So let's have a look at how that works. So I'm actually going to select a different fund. So under the reports menu, you find the new option there for cash flow. Okay, so just a basic one here, but what you actually see is obviously based on the categories pre-selected is for the particular entity that I selected, in this case an SMSF. It will split it down into either cash flows from operating activities, investment activities, and financial activities. And you can see here, if there's any sort of issue, it will display there if in particular a cash flow label or something hasn't occurred, and I'll go through that in just a second. So a couple of things here on screen to begin with is you do have the ability to increase or change the different custom periods. So comparison periods that you do have there. So you've got the flexibility there to go up to back really 5 years or 5 periods, going back to particular one, or you can just obviously go back to the default, which is 1 or even no comparison going through there. Where you see the categories that are displayed, so let's hear for dividends received, and you want to know that what makes it up. You can see the little icon there on the right hand side. I can see that's got a 3, and I can actually go through and actually see the amounts are made up. And let's say for CBA, I want to know what makes up that CBA one. I can actually drill down, and it will load the actual transactions that actually form that particular amount. Let's say I see an amount displaying in a category I don't want, and I want to go through and adjust that, or I've got custom accounts that I need to change the default for. You can actually go across there into the cash flow labels, and you can actually create your own custom label. So if you'd like a different category displayed, let's say rather than contributions, you'd like it to read as something else. Let's say member income received. You can actually go through and create your custom category. You do have the ability to go to accounts, so let's say specifically custom accounts, go through and actually select where you like that particular category going through yourself, or change it wherever you'd like it to go through there as well. So you've got a lot more flexibility here for this particular report than we've added before. So, and we're obviously just trialing it with this new report. And what we hope to do with this same flexibility is extend that to other reports. So we are currently looking at the balance sheet and operating statement to allow the same sort of flexibility to be applied to those two reports. So that'll be hopefully available there early in the new year. Okay, so obviously, like anything, that report can then be generated, and you can still generate this report directly from the report screen as well as part of your reports pack. And obviously, any of the labels or information you save will be applied there as well. Okay, jumping across the next one. So next feature there I want to cover is Workpapers and Workflow. So in the previous monthly webinars, I went off and covered the new workflow screen and how that works. So now we've done an integration there with the Workpapers where you can automatically trigger to actually complete tasks. So let's take a look at that. So if I jump back to the workflow screen. Okay, so I can see here all my existing jobs. So first of all, I just want to go through and look at the templates, and we'll see how this works. So if I go across to this one, which is my annual accounts one, so you see here on the right hand side, I've got triggers set up. So the two that we've added now, so if I've got two tasks here, which is prepare work papers and review work papers, for example, is you do, let's say for the review one, you do have the ability to set that particular trigger. And that could be obviously, in this case, work papers that are being completed. I'd like to that task be automatically completed. And in this case, in terms of prepare work papers, I can say, okay, when the overall work papers have changed to ready for review, to automatically mark that task as done. So if I go across now into the work paper screen, so I got the wrong one. Okay, so for this particular one, obviously, if I go through and do the bulk update process for the work papers, and I change the actual status here to ready for review, that obviously will trigger a message through to the work paper screen to automatically update that particular task and go through and do that. And it's the same thing if I mark these all as completed. Same thing as it doesn't matter if I individually mark these as completed. So if I go in and manually select that as completed, doesn't matter if I do that or whether I've just done the bulk action, as long as the overall status that I can see up there on the top right hand side actually says completed or says ready for review, then that just means obviously it'll trigger the process to go through and obviously update the workflow there. So if I go back to the workflow screen, I should see now that in this one here, that you can see now that the last task completed is review work papers. And if I go and tick that, you can see it's now marked off those two tasks for me there. So that's the integration we've done there. If there's any others like that you'd like to see, please just let us know by obviously utilizing the feedback button there on the right hand side, and we can definitely look at adding those other triggers. Cool. So next one there is T-bar opening balances. So we've added this particular function that where you're, let's say, taken on a new fund, migrated a fund from one of our competitors, or basically the fund is an existing fund but is new to BGL, is to make the actual process of having the T-bar records up to date or applying indexation a lot simpler. So if I go across into here, and I'll just swap the funds I've gone to. So yep, if I go across now, sorry, to the transfer balance dashboard. So if the system start date is equal to the current financial year, and there's pension members there that don't have a balance, it will display the following. So you can see here now I can enter in whatever the, let's say, opening balance is for the particular member. I'm just going into the particulars. And obviously, let's say that the highest balance was 900,000 at that particular point. And I was going to put in. Okay, I put in the relevant information, and I can actually click save on that, and I'll just do the same for that particular member there. Let's actually put in a different balance there for that one. Okay, we can save it, automatically apply those particular entries, and automatically then also apply the indexation where required as well. So you have the ability there to have that and have the relevant information input there. I'll say an extra 0 for that one. Okay, so jump back across. So obviously we've got an update coming out in 2 days' time. So just a quick sneak preview for those to see what's coming in this one. So we've added another property valuation firm, so CBRE. So obviously well known in the, especially the commercial property space. So they've got the ability there now to order property valuations across residential, commercial, and obviously agricultural and agribusiness there as well. For those doing transfers of funds between firms, either taking on a firm from another practice or let's say merging firms together, we now have the ability, which is optional, to obviously export the work papers as well, which is will be included in a particular update. And for the cash flow screen, which I showed before, what we're adding now to that is some more analytics that will be seen. As you can see there on screen, that's I can show them relevant information. You can set targets in terms of minimum max range, a bit like the same like to the investment strategy, in terms of min max limits for various cash accounts, and see summaries of where the actual amounts are coming from. So that'd be another one's coming through there. So that's everything there from in terms of the BG update. So I'll hand over to you, Aaron. I'll just give you access there.
No problems. Thank you. Well, the first thing, Jeevan, just from looking at the work papers, I'd have a lot more confidence in me being the reviewer, which I saw on there, than I would in Daniel on one of those. So, yeah, I digress, but yeah, I did notice those couple of things.
Yes.
Coming along fantastically. So last month, many of you that were online would have seen me talk about the introduction of what is these Division 296 laws. For those that don't know, our better targeted superannuation concession proposed measures, and they are still proposed, where we have an individual that has a balance above $3 million, a 15% earnings tax would in essence apply to that individual. So I touched on last month, as I said, some of the mechanics, because we have an exposure draft in respect to these particular measures. And the expectation is, given that we only had a 2-week consult, is that we are likely to see these measures introduced into Parliament in bill form in early December. So this time frame to work through this hasn't been great. And the reality is that the government, through consultation, is only looking at the fringes rather than trying to address some of the core issues. But what I wanted to start to highlight today is some of these other things where the narrative from the government really expands beyond the 80,000 members, or 0.5% of the population that are impacted. And one of those is around when a member dies. And a lot of this is a byproduct of understanding the concepts of how we will need to calculate the adjusted total superannuation balance, and therefore the proportion that relates to more than 3 mil and the superannuation earnings that have been calculated from it. And we have, similarly to like our transfer balance account, we have these debits and credits, or withdrawals we need to add back and net contributions that we need to deduct off. And this is where we come up with some quite interesting outcomes. And today I wanted to share with you what this actually looks like when we have reversionary and non-reversionary pensions in respect to when a member dies. So what you can see on the screen here is that we have a situation where we've got two individuals, and these two individuals don't actually have any transfer balance cap issue. So the TBC is the personal transfer balance cap. So they're under their personal cap, and they're also well under the $3 million threshold. But what we have here is the situation where a member dies, or member B in this instance dies, on the 7th of April 2026. These measures, of course, start on the 1st of July. And what we have here is a reversionary pension that is in place. Okay, so what we have to look at then is the adjusted total superannuation balance calculation, and there's a number of things that form part of that I'll touch on shortly. So we have a assumed level of pension that's come out, and as we know, with a reversionary pension, we have differences between what we have for total superannuation balance purposes versus what we have for transfer balance cap purposes. So with a reversionary pension, most of you will be aware that we have 12 months in which to restructure the affairs of this surviving individual, because the credit of that deceased member with a reversionary pension doesn't apply in this instance until the 7th of April 2027. But from a total superannuation balance perspective, when we have a reversionary pension, that pension is in essence credited immediately to that individual, and therefore we will have some important considerations, not only for contribution planning and those things and for disregarded small fund assets, but we now have to overlay the Division 296 tax rules. So we can then see as we get to 2027, we've got some growth in respect to that fund as well. So what we would likely end up with at 30 June 2026 here is a situation whereby we'll probably have the two pensions still running because we don't need to restructure until April 2027, but we have a decision to make whether we're going to commute that money back and then make sure we've got only the amount that it would be back to member A's transfer balance account, so their personal transfer balance cap at that point in time, or are they going to, in essence, take out some of the excessive pension from the spouse that is automatically reverted to them. So I'm not going to focus on those elements today, but they're the decisions that would need to be made. But let's have a look at this for Division 296 now, because what is crucial to understand as part of this process is that Division 296 is not relevant to in the year in which a member dies, unless they die on 30 June. And I think I did touch on that last time. So any day of the year, in the year of death, there is no Division 296 liability that will apply to an individual, regardless of whether their value is below $3 million or above $3 million. What then happens, however, is that the auto reversion, as you can see here, we have that added to that beneficiary's account immediately for TSB purposes. So when we look at the adjusted total superannuation balance calculation, the calculation requires us to add back withdrawals and deduct off contributions to help work out what the change in earnings has been for that particular year. So we did see on the previous slide the fact that we had $100,000 of pension payments, benefit payments coming out of the fund. It didn't matter if it's lump sum or pension. So we have to add those back. But in the contributions, in terms of what we have to deduct off, we are entitled to deduct off any income stream that is in essence being applied to that individual that has become entitled to it. So a tax-dependent beneficiary. So where they start an income stream, i.e. from a reversion or from a death benefit pension ordinarily, that first year, in essence, they will get an exclusion or an adjustment by virtue of the contribution definition here for adjusted total superannuation balance. So in that first year, so if I go back a slide, we're not going to see any Division 296 tax apply to that member in year one. Okay, so for that member A. But when we move forward the following year, well, again, we have to go through this particular process, and the adjusted TSB calc for the purposes of superannuation earnings that are subject to the Division 296 tax, you can see here, we only get to adjust the withdrawals. We don't get to continue to adjust the death benefit pension that that person is now entitled to. So what that now means is member A now has a balance in excess of that $3 million. And when we look at the earnings that would be relevant for that person during that period of time over the financial year, we would work out the proportion that is relevant above 3 million. And in this instance, it's about nearly 21% or a bit over 21% by whatever superannuation earnings have been calculated by the 15% tax that would apply there. And as I said, that would be a tax directed to the member. The member would have the ability to either A, pay that themselves, or B, would go through a release authority process in a similar vein to what we see with the Division 293 tax for superannuation surcharge or the income above 250,000. So reversionary pension in this instance, yes, we get the immediate adjustment for the year in which the member has died, and the recipient has automatically become entitled to that pension. But after year one, there's an issue in respect to that. And therefore, you can clearly see in a situation where we had two individuals that were well above the Div 296 tax rules, they are then, arguably, the survivor of them is going to get caught up within these rules. And that hasn't been given a lot of airplay. But I do then want to flag this similar outcome with you. And this is looking at the same set of rules, but not actually having a reversion in place. So we have identical balances. We have an identical time frame in which that member has died. We have an identical level of pension that has been taken. But when we look at the cashing rules where we don't have a reversionary pension, the superannuation law within Reg 6.21 talks about the fact that the benefit must be cashed as soon as practicable. So there's no 12-month deferral for transfer balance cap purposes, but rather we need to determine the balance and start that balance as soon as we practically can. Now, it's not unreasonable in this instance for it to take 3 months, 6 months, 9 months, and in some instances, we can go even well beyond a 12-month period subject to the makeup of the assets and the situation of the beneficiaries that may be entitled to that superannuation death benefit. So what we're looking at here is rather than for transfer balance cap purposes, having that automatically entitled, there's a decision that has been made to effectively start that pension on the 1st of July 2026. Now, there's a range of things in here that we need to compare, one reversionary versus non-reversionary, but things like tax exemption, we still get the tax exemption until such a time that that pension has been started. From a transfer balance cap point of view, yes, in this instance, we won't get the 12 months credit, but what we do get the benefit of here does actually come within the Division 296 tax rules. And this actually comes about because of the way in which the total superannuation balance definition gets caught within the notion of Division 296 and the fact of when the member becomes entitled to the pension. So let's go back and revisit this same scenario. So Division 296 tax is not relevant, again, in respect to the death of the particular member, okay? Again, regardless of whether they have a balance above 3 million or not. The requirement, as I stated already, is the benefit must be cashed as soon as practicable. So if we don't start it until the 1st of July, then the death benefit pension doesn't kick in until that following year. And therefore, their total superannuation balance, which is linked to Division 296, isn't credited to that individual until they start that pension. So what we end up with here is at 30 June of this year, they actually only have the $1.7 million balance, not the aggregated benefits of the two, in which we would see where we actually had a reversionary pension. So what we end up with here is in year one, there's no Division 296 tax because clearly they have remained under that. We go to our next year, and because we started a death benefit pension in that year, then in year one, we actually get the adjustment for the pension that has started, in this instance, valued at $1.9 million. So again, a byproduct of, well, what is the balance, the aggregated balance of the member? Because we've started that pension, the opening balance is 3.8 million. We adjust for the pension payments up, and we deduct off the death benefit pension that commenced in that year. So it takes us down below the 3 million, and therefore we have no Div 296 tax that applies in that second year where it did in the context of the reversionary pension. And it's only once we get beyond that year, then Division 296 tax will apply. And again, it's going to be subject to the way in which we work through our adjusted TSB calculation and the superannuation earnings, and then the proportion that is relevant above that. So I think one thing just to flag here for people is, and there is a growing, I guess, reference to the way in which we might have our pensions constructed. And that is, here I've been able to demonstrate there may be situations now where non-reversionary pension outcomes are going to be better than reversionary pension outcomes. And I would certainly say that is going to be the case where you have clients that will end up in a position above their personal transfer balance cap, and even more so, as we've seen in this situation where we have a client that then gets impacted by the $3 million test. Now, you could argue that in this situation, well, what happens if they died on the 7th of August rather than the 7th of April? So yes, you might start a pension during that year. So therefore, the timing issue of that becomes somewhat irrelevant. The challenge for you, I guess, is to say, unless you know when your clients are going to die, well, then part of what we do is we help manage risk in these things. So yes, we might not get the 12 months for transfer balance cap purposes, but in a lot of instances, the fact that we might run 6 months, 9 months or whatever might actually provide a better outcome on the longer term because of the way in which the Div 296 rules would actually work. So something just to be conscious of. There is, I guess, some discussion around, well, what would we need to do in terms of unwinding or changing that reversionary? Might be a topic for another session, Jeevan, early in the new year. I can obviously talk about the different pros and cons of reversionaries and non-reversionary pensions, but there may be scope. I know with our Smarter SMSF documents, you can change those midstream, and there's ways in which you can achieve that. The other thing that I wanted to just touch on is we're doing at Smarter SMSF a lot of work in our course content. Many of you would know that come to our training. We have Tim Miller as well on our team now. And the training concept is really evolving into what we call our Starter Smarter Smartest concept. So many of you have used our SMSF Foundations course. It is available either via our own platform or via the BGL Learning Channel. What we're doing is we're going through a process of rebranding that to, in essence, an essentials framework that you can see there, sort of the mid-journey for people that have an intermediate level of skill. What we are then doing is, and this will be ready next month, is that we are adding a new foundations course. So a true starter level, 6 modules, 10 hours worth of content. And again, that will be available on the BGL Learning Channel to do. So our Essentials course, no price changing. We have repurposed some of the content in there. There is a discount that is available for that via the BGL channel there. And we will have the same level of discount available on our Foundations course. Whether Norman gets all that done before Christmas, I don't know. I'll try and get it to him. Whether he gets it done or not is up to him. But so you will see over the coming month both the Essentials course being updated because all those modules, as I've said, we've recut some of those to change the context of it, and then our new Foundations course. And the last thing that you'll see there is our advanced course that we're going to be doing as well. So that really builds the suite out of education. And what I should say is our Foundations course, you will get a complimentary membership to the SMSF Association as well as part of the benefits that we've been working with the SMSF Association on. From an update point of view, I guess generally, we're continuing to do a lot of sort of build at this stage. We've got our new document platform. updating the features on that as well, including some of the new API functionality that BGL's released with deed upgrades and the ability to get and post data around that. A couple of other reminders. We do see a lot of people using our TFN ABN integration off the back of new SMSF orders. So that is available to use. And one of the things that I worked extensively with Jeev and I a little while ago was our end-to-end integration with the pension documents. So not only can you get your fund and member information, you can choose the pension data and get all the components and stuff to generate that as well. And we'll be releasing our CSV import. So if you want to be able to do multiple orders, or you're wanting to pull data out of different platforms that we don't have that integration with, you'll be able to do that as part of that process as well. And again, we're sort of trialing that with a couple of our clients too. And the final thing, I guess, from our side is we are doing a bit of work at the moment on an AI solution that will actually help people understand differences and nuances and stuff within the different documents. So we're going through a process at the moment of, I guess, adding some training and education to the bot around our smarter SMSF documents. But you can see here just a couple of the examples that you'll be able to either ask generally on the documents page about what document might be relevant, or you can, as you go in and actually order a document, you want to find out a little bit about a particular thing within the deed or within the pension documents or something, and you can start to ask the AI bot, and it will then talk it through. So one of the common things is we have in our deed is this concept of a special rule of the fund. So the question here is, how can a special rule be used? And then it talks about the concept and what it actually means. You can ask it particular rules. So here, what is the rule number to be able to remove a trustee due to incapacity and appoint the LPR? Or what rule allows for the powers to borrow using a limited recourse borrowing arrangement? So these are things that the team have been working on over the past few months. And we'll be making this available within our new updated document platform as a feature on, you'll see it in essence on the right-hand side, to be able to go through. So they're just a few things that we're working on, and hopefully, yeah, a bit of an update on the Division 296 stuff as well to whet your appetite. And as is always the way, if you've got want to look at our documents, you can do that through BGL, and you have the order documents button under the connections. You can go in, connect to us, and then you can look to order, whether you do that via a subscription or you simply go and do that on a pay-as-you-go basis. So, Jeeves, that's it for me. I'll hand it back to you.
We can, I think, wrap things up. So, Aaron, thank you again for presenting. I guess Division 296, we'll see that LS3 grow over the next, I think, 6 months, and obviously into the new year.
Absolutely.
So I think our next webinar is on December 19th, so we'll catch up then.
Will do. Excellent. Thank you.
Okay. Thanks, everyone. Bye.
Bye for now.